Good day, ladies and gents. This is your class test 1 of 2017. They say it's a 30-mark question. Ignore any form of value-added tax. Moreki Fabrics Pty Limited. Shortly, Moreki is a small, elegant company that designs and sells wedding dresses. The company is situated in Cape Town and prides itself on prestigious elegance. Customers range from high government officials to CAs, doctors and other wealthy individuals in and around South Africa. The year end of the company is the 28th of February. The company applies international financial reporting standards for small and medium-sized entities. Special fabric is imported from a well-known company in Dubai named Fabricana Limited. Because Moreki makes large purchases from Fabricana during the year, they received a bulk discount of 10%. So this is a trade discount which must be subtracted from the cost price. One wedding dress requires 15 meters of fabric one, which is used as a lace underneath every dress, and 30 meters of fabric two, which comes in different prints and colors, depending on Moreki's request. All these prints and colors cost the same price. Fabric 1 and 2 are the primary source of the raw material for the dresses, and therefore the cost of inventory mainly consists of raw materials. Additional information, raw materials, we had fabric 1, 20,500, which is 75 meters. Fabric 2, 56,000, which was 150 meters. Purchases during the year. On the 20th of March 16, a purchase of 975 meters of fabric 1 at $20.25 per meter and 1,950 meters of fabric 2 at a cost of $35 per meter were made from Fabricana. The goods were loaded onto the ship in Dubai on the 20th of March 16 and unloaded at Cape Town Harbour on the 19th of April. The company paid for the goods, excluding import duties, on the 26th of April 16. These are considered to be normal credit terms. The goods, which means considered normal terms, you don't have to work out the present value. The goods were purchased free on board. Now, if it's free on board, we need to look at the date on which it was placed onto the ship. And we know that was on the 20th of March 16. Import duties was $2,000 US dollars, were paid in cash on the 20th of March to Dubai's Customs Department, and this amount can be claimed back. Then they said the following spot rates were applicable: the 20th of March, 19th of April, 26th of April, and we need 15.37, the exchange rate for $1 US dollar. Because we are using FOB. It is the company's policy to always have a minimum amount of raw materials in stock to make at least 5 dresses at year end. All other materials are regularly used during the year due to high demand of wedding dresses throughout the year and are easily to obtain. Therefore, no inventory is kept on hand. The next bullet, other overhead costs in order to complete the raw materials and have a completed dress amounts to 1,000. So this is cost to complete that was given to you. And I'm going to stop here, and I'm first going to do the memo for raw materials. Now, if we have a look at the typed memo, yes, we'll come back to the actual required part, which was actually the disclosure in terms of your notes. But in order to understand what amount should go to your disclosure, we're going to look at fabric 1. The opening balance was 20,500 and it was 75 meters. Then we bought 975 meters at $20.25 US dollars. So ladies and gents, if this was rand, surely you would have also said 975 meters times 20.25 rand. But now it is US dollars. So if you were in Dubai, you would have had 975 times 20.25 US dollars. Then you got 10% bulk discount. So you're only going to pay 90% at the exchange rate of 15.37. And the total amount that you are paying on fabric 1 is 273,115. Import duties is 0 because we can claim it back. Then the question said at year end, we keep enough fabric to make 5 dresses. Now the question also said you apply the weighted average method. I haven't read that part for you, but if you look at other information, the company uses the weighted average cost formula to measure all inventory items. So fabric 1, fabric 2, work in progress and finished goods. So how do I calculate what is the weighted average cost of my inventory at year end? You're going to say it's the 2,500 plus 273,115, leaving you with 293,615. Divide that by the total number of inventory that you had. You had 75 meters and you bought another 975 meters. And you have 15 meters times 5. Why 15 times 5? In the question, they have said to you, and I'll read it to you, where they have said, one wedding dress requires 15 meters of fabric 1, which is used as the lace, and 30 meters of fabric 2. So taking all of that into account, we're going to say it's the rand value divided by the total meters we had, which was 75,975, times that then by the total number of meters left at year end, which is 75, which would have given you a cost there of 2973. At this stage, you also then need to test it against the net realizable value, which I will do just now. Just for the record, this was the cost price was lower than the net realizable value, which means we will keep on using this as 2973, the cost in terms of weighted average method. Now, if you have the total rand value that you had and that you've purchased, less your closing inventory, is going to give you 272,642 that will move over to work in progress. So raw materials, 272,642 for fabric 1. Now, for fabric 2, they said you had 150 meters at the beginning of the year, and that had a 56,000 value. Then the purchases, 1950 times 35 meter. No, it's, sorry, let me just quickly see. It is then, they said we bought at 35 US dollars per meter. So it's 1,950 times 35 US dollars, less 10% or multiply then straight by 90%, times it by the exchange rate, which was 15.37, and it's going to give you a total value of 944,102. So how much did the inventory cost me for the year? 1,000,102, and that is what we had available. But they didn't say how much went over to work in progress, but you could have calculated the closing value. We have then a total value of 1,000,102, so it's 56 plus 944,102. Then you're going to divide that by the total meters you had, which was 150 meters plus 1,950. That then gives you a weighted average price. So the rand value 1,000,102 divided by 1,950 plus 150 meters gives you an average, and that you multiply then with the meters on hand at the end of the year, which gave you a cost in terms of weighted average method 71,436. Now, before I can just assume that the cost prices are lower than the net realizable value, we need to do a test for the net realizable value. Now, they said in the question, if a dress that is still raw material needs to be completed, we just need 1,000 rand per dress as other cost. That was the last bullet just before you got to work in progress. I said other overhead costs in order to complete the raw materials and have a completed dress amounts to 1,000 rand per dress. So if there is material for 5 dresses, then surely we're going to sell the 5 dresses for 21,000, which is going to give us 105,000. But in order to complete the raw material of fabric 1, you also need to add the fabric of the material of fabric 2. And 5 dresses of 1,000 rand is going to give you 1,000. So fabric 1, in order to complete fabric 1, I need to know what is the estimated selling price, 5 times 21,000. What do we need to complete fabric 1? We need the materials for 5 dresses of fabric 2, which you have calculated as 7,143.6. You also need to spend 5,000 on other costs. So if I subtract that, you might have in the future a 28,564 in your pocket. Now, if you compare that to the cost price of fabric 1, which you have already calculated based on weighted average, it would have given you 29,703. Now, which one is the lowest? The cost price is the lowest, and that's why you will see this as your final balance for fabric 1 inside your general ledger account. Now, for fabric 2, remember, we have enough material for 5 dresses. So 5 dresses to be sold at 21,000 each is going to give you 105,000. But what do you need to complete fabric 2? You need the material of fabric 1, which was 29,703. 5 dresses at 1,000 rand each is going to give you 5,000. So estimated selling price less cost to complete gives you 79,027. What was the cost price you have calculated already in your general ledger account in terms of cost based on the weighted average method? It was 71,436. Now, which one is the lowest here? It is your cost price, 71,436. So if I move back to my general ledger accounts, I'm going to keep this balance as 29,703 and this balance as 71,436. Then, ladies and gents, if you have your closing balances, you also then know that everything that you had available, less what is not, that has not gone into the production process at the end of the year, would have gone to work in progress. So everything that you had, less your closing inventory, will give you the work in progress that went into the production line. Now this 272,642 moves into work in progress. And this 928,666, how did we calculate it? The rand value you had available, less your closing inventory, will give you 928,666 that went into work in progress. And that's why my primary cost, which is mainly raw materials, fabric 1 and fabric 2, they come from my raw material accounts. Then purchases, other costs, they said to us, inside the bullet that talks to work in progress, and I haven't read that part because I only wanted to finish the raw materials first. If we look at work in progress, it says there were no opening work in progress balance at the beginning of the year. The closing balance of 25,000, which is the equivalent of 20 incomplete dresses, consisted only of other components, no fabrics, used during the manufacturing of a dress, and the items cannot be attributed directly to a specific dress. Apart from the raw materials still on hand that can be used to complete these dresses, the remaining incomplete dresses will be solely made from the newly designed fabric 3. Refer to additional information below. In total, these incomplete dresses will require 525 meters of the newly designed fabric 3. The only other cost needed to complete these dresses is fixed overheads amounting to 18,900, relating to all 20 incomplete dresses. A dress made only from fabric 3, not fabric 1, fabric 2 and fabric 3, only from fabric 3 takes 35 meters, which actually this sentence you didn't need. The cost per meter of the newly designed fabric 3 amounts to 550. Now let's look at the note that they are talking about. They said in the question, at the end of the year it was noted that the market for fabric 1 in Dubai had dropped drastically, as fabric 2 was now designed in such a way that one dress does not need fabric 1 and 2 to produce a dress. The selling price of a dress made from the newly designed fabric 2 is the same as the current selling price of a dress. The fabrics cannot sold separately by Moreki, which means we have to complete the raw materials before we can just sell it. Then, ladies and gents, I am still looking for a sentence that I wanted to share with you. But if I get to that sentence, I will then read it for you. Okay, let's go back to the memorandum. So, work in progress. What do we need for work in progress? We have raw materials, which we have already dealt with. And then we need additional information that tells me what is my variable and what is my fixed overheads. Now, if we go back to the part that dealt with the work in progress, they said the depreciation of 50,000 relates to sewing machines in the factory. The machines were idle for 40% of the time during the year. The idle time was caused by a protest of taxi associations very close to the factory, and it caused delays in the commencement of production as well as some disruptions in the production itself. The protests are not considered as a normal delay in the production process and are therefore not likely to occur again. Moreki uses the straight line method to depreciate the sewing machines to a residual value of 0. Now, if this idling time is not normal, then we cannot say it's part of my normal production cost. So 50,000, first of all, will be seen as a fixed overhead because it's the straight line method. So irrespective if it was used or not, the depreciation is calculated. So this would go to your account called fixed overheads, but only 60%. Wages and salaries, a total of 60,000 was incurred for wages and salaries during the year. 40,000 relates to 3 employees who were working in the factory based 60% of the time and retail based 40%. So 60% of the time they're in the factory, 40% of the time they're in retail. The other 20,000 relates to salaried administrators. The factory laborers are not paid per hour or per dress, but receive a fixed wage. So this cannot go straight to your work in progress account. It needs to first go to your fixed overheads. Then the electricity. The electricity bills are separate for factory and the retail. 12,000 of the bill relates to factory. The change in electricity utilization from one year to the other is immaterial as Moreki utilizes a solar system and therefore electricity is mainly used for lights, which makes all 3, A, B, and C, fixed overheads. The total purchase of 240,000 were made relating to designs, colored threads, and all other components used during the manufacturing process. The total delivery for this from the suppliers to our factory amounted to 23,000, and these costs increase with the number of dresses produced, which makes this variable. So if we now go back to our work in progress account, we need variable overheads and we need fixed overheads. Now, the 240,000 purchases of other costs, we have already established that it is variable, so it goes straight to my work in progress. Then the delivery of the 240,000 goods is also part of a cost to get the goods to my premises, which was necessary for the production process, 23,000. Then the 3 items, this depreciation, the factory wages, and the electricity, all 3 of them was seen as fixed overheads. And now we need to be looking at what is the normal production. Now the question said that normal production capacity is 70 dresses per year, and we have completed 65 dresses. So if I want to know how much of my fixed cost, how much is my total fixed cost, 66,000, can I allocate the full 66,000 straight to work in progress? The question is no. If you have produced less than your normal production, you cannot take the full 66,000 to your work in progress. Now, how much can I take? You start with a rand value 66,000, divide by your normal production of 70 dresses, multiply that by 65 that you've actually produced, and of the 66,000, you will only take 61,286 to your work in progress. The other 4714 will move to your statement of profit or loss into cost of sales. Right, so how much do we have now here? We've got the 2 raw materials, we've got the other cost, we've got the delivery on the other cost, and we have our applied fixed overheads. Now we need to determine what was the closing balance. Now I know that the cost, the question did say, there was 20 incomplete dresses at the end of the year and they had a cost of 25,000. So if I take this big rand value 15255